And Caroline Hyde joins us now live from London, along with our guest host for the hour, Roger McNamee, co-founder of Elevation Partners, a private equity firm that invests in intellectual properties and media and entertainment companies. Roger, great to have you back here on the show.
Lovely to be back with you.
Highs, lows, Bitcoin, are we in a bubble?
I would think we probably are. I think it's really important to distinguish between cryptocurrencies and the blockchain technology that comes underneath them. To me, the thing about cryptocurrencies is that they really aren't currencies. They're really commodities like soybeans or pork bellies or whatever. They're things that people trade to create a return.
So what does that mean about the value?
Well, it means it's going to always be volatile. I think it's volatile by design. I think it was designed to be volatile. And currencies, by definition, need to have stability. And so if you look at this and you think about it, it's more like trading gold futures or more like trading oil futures. I think those are going to be inherently volatile. Yes, there's something very valuable underneath them, but you wouldn't use gold futures to pay your mortgage or to go to pay your child's college tuition.
So do you think if you own Bitcoin now, does that have long-term value?
I think it's too early to know. I look at this and I go, structurally, these things don't look like they can make the transition to being real currencies, but I'm not sure that matters to the investors who are in them. I think they're just in it for the volatility and the return. And that may well work out, as it has recently for a lot of people. But I do think we're not done with the sharp drops. And I do think there are still enormous structural issues. I mean, there are thefts of the various cryptos here, there, and everywhere. And that, I think, is going to continue. And the whole concept of the role of miners and, the fact that these are things adopted primarily by black and gray markets suggests, at least confirms my basic notion here, which is that I think these are far, far, far from mainstream currency options.
You mentioned people getting robbed, the number of complaints about Coinbase, the biggest cryptocurrency exchange, has gone from 6 last year to almost 300 this year. And yet, Caroline, we're seeing so much more mainstream acceptance. Give us some of the examples of how we're seeing mainstream investors embrace this.
I think that's what's so fascinating, and is indeed it's the likes of Fidelity, one of the biggest money managers. They are mining Bitcoin themselves, and they themselves are also looking to be getting into this as an asset class. We're seeing banks, as Roger was there clearly distinguishing between the actual cryptocurrency and the blockchain technology, the sort of shared record keeping that underlies it. Banks want to embrace blockchain, the actual technology. 6 banks today joining UBS's project, which is called the Utility Settlement Coin. They're building their own coin. It's going to be available by the end of next year. Why? To make financial transactions that much easier, clearing, settling. This is why they want to introduce this sort of technology, not perhaps as a store of value, as we're seeing Bitcoin suddenly become. I think that's what's so interesting, is why we saw the split in Bitcoin into Bitcoin and Bitcoin Cash. Is really at the heart of this is, what is Bitcoin? Does it remain a store of value? Does it become a so-called haven when you see a flight to value, when you see concerns about North Korea, for example, gold shoots up, as does Bitcoin? Or indeed, does it become more of a payment mechanism? Therefore, does the transaction capacity have to scale? And therefore, do we need to start to see improvements in the size of the transactions? This is how much Bitcoin is beating gold. I think what's interesting is, talking about the flood of investors into this market, you're in for a roller coaster ride, whether you hold the actual cryptocurrency or indeed whether you gain exposure via a fund. Check out my Bloomberg at the moment. I'm going into #BTV if you type it into the Bloomberg, and indeed you can type in 3994. What do you get? A crypto roller coaster. What do you get, Emily? You see in the white line, Bitcoin Investment Trust. This is where money managers have been pouring their money, who don't want to buy Bitcoin outright. They want exposure. On the bottom half, there is where we see that the 90-day volatility of that investment trust is more than 3 times the volatility of Bitcoin. So whether you want to try and be overall, it seems as though you're in for a rough ride, whether you've got the cryptocurrency or indeed an investment trust.
Now, if you look at the run-up in Bitcoin, it is dwarfing the run-up that we saw before the tech bubble, before the housing bubble. Roger, is that a concern?
Well, only if you're long Bitcoin. If you've already taken your profits, you're sitting there going, not a problem at all. I look at this, and when you talked about $170 billion of interest in this category, that's why, that's why you see banks and others coming in. Clearly, people are going to, why are we having this segment right now? There's a lot of interest in it. The trick here is, at least for the viewers who are watching this, to separate the commodity of Bitcoins from the notion of a cryptocurrency. A currency needs to have stable value, and I just don't think you're going to get there from this. Then the third piece, and this is the one that I'm excited about, is the underlying blockchain technology. There are a lot of reasons why people would like to be able to do high volume financial and information transactions at a very low cost with privacy and security. Blockchain technology offers that promise, and I think everyone is excited by that. And what I would love to see is one of these banks or other financial institutions actually try to create a currency, try to create a stable store of value that would be, that would rival a national currency, because that is the promised land that I think so many people are hoping to go to.
Now, when it comes to the blockchain, there's all this talk that it could not just revolutionize financial services, but real estate, but giant technology companies that hold stores of data.
And sale of information, right? So
where do you think the blockchain could be the most revolutionary?
I look at this.
Or is that an exaggeration?
Too early to tell.
Yeah.
To me, what's exciting about it is that it is like the internet before it. It's a distributed system where scalability is not a problem. And with the scale of markets you have today, if you can take that off the table as an issue, you can apply it to almost anything. Now, what remains to be seen is which markets will find this most appealing. And in its current state, the answer is only experiments, right? Consumers are not yet interacting with this regularly, but a lot of money's been raised. We're going to run that experiment. We're going to see. And I look at this and I go, to me, that part is really, really, really exciting. And it makes it worth going through what I think is going to be further issues around the so-called currency part of this discussion.
All right, well, we're going to continue this conversation throughout the show. Roger McNamee of Elevation Partners, you are with me for the hour. Bloomberg's Caroline Hyde in London. We'll see you in a bit as well. We'll have more on our special look at the world of cryptocurrencies throughout this show. This is Bloomberg Technology. I'm Emily Chang. Back to our deep dive on the digital currency market. Thanks to a massive rush from investors this past year, the entire industry is now valued at $170 billion. Now I want to send it back to our Caroline Hyde in London, who is standing by with a leader in the cryptocurrency space. Caroline, take it away.
Emily, thanks so much. You're right. The leader is none other than VinnyLingham. Now, Lingham has been in the digital currency game for some time now and is known for his continued success in calling the price of Bitcoin. Now, the serial entrepreneur now heads up Civic, a security identity platform that provides a decentralized method of confirming your identity using the blockchain. Joining us from Boston, it is Civic CEO VinnyLingham. Vinny, great to have you joining Bloomberg Technology. And the Bitcoin Oracle is what you were dubbed, but then back earlier this year, you said you sold out most of your holdings in Bitcoin. Do you regret it, and why don't you buy this rally?
Well, look, I decided that at the start of the year there were a lot of risks on the horizon. I mean, obviously Bitcoin had a really good run. Last year Bitcoin was sitting at around 400 where I made the call to buy, and I said, look, this is something that's going to go up. And when we got to a point where there looks like there are a couple of hard forks this year which create sort of technical risk for Bitcoin, I decided that there was a risk-on scenario that I didn't like personally for my portfolio, and I decided to reduce my holdings in Bitcoin. But I still hold Bitcoin, so I've been very happy with the run.
Of course, there's still ongoing concern about yet another opportunity for a hard fork to occur as soon as November. Do you expect that risk to become a reality?
I do. At this point in time, we have roughly 85% of the mining hash power, standing behind SegWit 2x, which is a proposal to upgrade Bitcoin in a sense. And there's some debate over whether it's an upgrade or not, but it's really about the block size of going from 1 megabyte to 2 megabyte with SegWit, which is added to it.
So these are all very technical terms that we're now hearing, and this is about trying to expand the transaction size of Bitcoin and making it basically more of a means of transaction, a means of payment, rather than perhaps just a store of value. We've had Roger McNamee joining the show saying, look, he doesn't buy Bitcoin as a currency. He sees it much more as a commodity. Will Bitcoin and indeed other cryptocurrencies become a method of payment rather than a store of value?
Look, I think that the store of value analogy is very good. It just is. It's something which I've been saying for a while. I think Bitcoin becomes a store of value if it becomes more of a payment method. I mean, you know, my view on Bitcoin was it started off as something which was a speculative, commodity, the world's first digital commodity, and then it became a medium of exchange, which we started using for transactions. And then in the long term, as the price rises and it becomes more stable in price, it becomes a store of value. Stores of value are not typically super volatile, so you're looking for things which are going to consistently rise. Every single month and year, and you can actually store value in it. Bitcoin has been very volatile this year. I mean, a month ago we're sitting at 1,700, or 6 weeks ago at 1,700. Now we're at 4,700. So that's pretty volatile. But it's been, again, it's in a good run right now. It could continue to go up to, sky's the limit. I wouldn't put a number on it, but my issue has been with the technical risks.
Many, though, are very excited, not just about the cryptocurrencies you could or could not buy, but the underlying technology, the blockchain. And this is where your Civic company comes in. This is about identity record keeping. I mean, this blockchain could disrupt the financial sector, law keeping, record keeping. Where do you see its greatest application?
Well, that's the exciting stuff for me. I care less about the price. I mean, in fact, I think too much focus is made on the price of Bitcoin versus the application of Bitcoin and blockchain technologies. We're using it in such a way that we're basically able to create digital IDs. And the problem that Bitcoin solved was that double spending with digital electronic money was something which hadn't been solved before. How do you prevent somebody from spending the same money or the same digital tokens twice? And Bitcoin solved that. And in the same way it solved that problem, it solved it for digital IDs. How do you prevent someone from making a fake copy of a digital ID by just copying the bits and bytes and moving it from one location to another? By leveraging the blockchain, we were able to create digital IDs that you could use as a way of going through airports, passports, logging into websites, accessing your motor vehicle, and at least when someone checks the ID, they know that it's you.
Vinny, what fascinates me is, of course, you yourself did an ICO, an initial coin offering. It was a pre-ICO even, but you've raised money by going to the crowd, by selling your own tokens. How much is the venture capital industry going to be disrupted by blockchain technology, by people being able to raise vast quantities of cash in very short time horizons? Because why didn't you go to a VC?
So we do have VC investors, and we had a few rounds of VC funding. This was different. We did a token sale, and the reason we did a token sale was we're trying to create an economy that uses smart contracts, which is something which sits in the blockchain and cryptocurrency world, to enable us to run these ID sort of digital ID products. And these smart contracts enable a huge amount of privacy because you don't want people to know when you're using your ID and how, etc. So we did our token sale, and part of the token sale we reserved 33% of the tokens for partners. So now we're able to onboard very large partners. For example, wikihow.com, they've got over 150 million monthly active uniques. We're live on their site. We're able to do that because we're able to offer them tokens to be part of the network, to enable a network effect to take off and allow digital IDs to grow.
The joy of marketing via an ICO. Civic CEO VinnyLingham, great to have you joining us live from Boston. Emily.
All right, Caroline, thank you, Roger. I gotta let you respond because I could just see the skepticism in your eyes as you were listening there.
Yes and no. I hope he's right. And clearly to this point, he has been, and it's worked really, really well. I think for the average consumer who's looking into this space, you just need to remember we're in the early days, and we're at the portion that favors the people who have lots and lots of information. And for the typical consumer coming in here, you're at a huge disadvantage, and I do not think in either the short or long term that's going to work out well for you. You never want to be on Wall Street as the one with less information.
All right, Roger McNamee, Elevation Partners, you are sticking with me. Coming up, more on our deep dive into the world of cryptocurrencies. We will hear from Fred Ehrsam, Coinbase co-founder and one of the first people to put all of his professional efforts into this industry. His thoughts on the current price and how blockchain can disrupt more than just banking. Next, this is Bloomberg. As we've been discussing throughout the show, the rise in the value of the crypto market has been unprecedented. So, can the industry scale as more investors jump in? How is it gaining legitimacy among big investors and institutions? We asked those very questions to Fred Ehrsam, Coinbase co-founder, who remembers when Bitcoin was just in its early stages. Take a listen.
People who are working on Bitcoin early always thought it had the potential to be something huge. Otherwise, they wouldn't have been so excited about it, or they wouldn't have spent their time on it. But to have said it then would also have sounded crazy. So you always think it's possible, but you never assume.
You've said we've gone through several hype cycles. I mean, do you think we're in just another stage of a hype cycle here?
Yeah, one of the luxuries, I think, of having been in this industry for about 7 years now is you get to see this same kind of hype, boom and bust pattern repeat itself over and over and over. I remember when Bitcoin went from $2 to $32, back down to $2, then it went to $256, back down to $70, over 1,000, back down to $200, and now we're over 4,000, right? So I think the reality is that these sort of boom hype cycles draw more people in, more investors, more talent, more attention. And even if there is a bust, you arrive at a subsequently higher baseline than where you went in. And the cycle just kind of repeats itself into this sort of self-fulfilling prophecy.
So do you think the industry can scale as more investors jump in?
Yeah, so this, I think, is the main bottleneck for the industry. Right now, the blockchain is about 100x off of being able to handle an end-user application of about 5 million users, and about 20,000 off running Facebook as just one application on the blockchain. So we're quite a ways away. That being said, if you remember the beginning of the internet, people thought it was crazy that everyone would be able to interact on it, let alone play a simple video, right? And we do that every day today. The good news is there are a lot of different approaches for scaling. The bad news is not too many people are working on it yet. The other piece of good news is that, as we were saying before, with this hype cycle, there's way more talent entering the industry than I've ever seen before, probably by at least a factor of 5 or 10.
And where are they coming from?
Really all over. Some people are taking the jump from Wall Street. The thing that I think is really exciting now is you're seeing talent from the kind of the typical mega tech companies out here start to flow into the industry, really high quality engineers who know how to scale systems.
So how do you see cryptocurrencies gaining legitimacy among investors and institutions?
Yeah, so encouraging signs on that front. On our exchange, GDAX, we've seen some of the more typical hedge fund players, especially the market makers, start to sign up over the last couple of months, which is really great. And you see it talked about, more and more in sort of the typical Wall Street forums, banks starting to experiment with various aspects of the technology. So I think all that progress is great and it legitimizes it. At the same time, I also think it's less important than most people may think. The reason is I think most interesting behaviors and technologies that come out of new paradigms are usually native to the new paradigm. In other words, if you look at the top 50 websites on the internet right now, the only one that was a company that existed before the internet was Microsoft. All the others are brand new. It's new kind of behaviors like eBay, Wikipedia, Google, Facebook, etc., right? So while institutional support is important and will help us get off the ground, I also don't think it's where the most interesting stuff will happen.
Where will the most interesting stuff happen?
Organic things from the community, things that were never possible before the blockchain existed, these sort of uniquely enabled behaviors.
So give me some examples.
Yeah, absolutely. So I think one of the really interesting things about where we are in technology today is technology companies are the most valuable companies in the world. If you look at the top 5 by market cap, Google, Apple, Facebook, Amazon, Microsoft, right? But if you look at just why these companies are so valuable, it's because they've effectively built really big databases around strong networks they have. For example, Facebook has a big social network, and you can't take that network effect and port it over here if you want. You could say the same about other big networks you might use every day, like LinkedIn or Uber or Twitter, whatever it may be. Blockchains, I think, represent a fundamental paradigm shift there, where now you don't need a middleman, much like you don't need a middleman to move your money. We might think about it disrupting banks. You don't need a middleman to own your data and potentially extract a rent from it.
So do you see Bitcoin then as a way to disrupt the big tech companies?
Exactly. I think the big tech companies will be disruptive as much, if not even more, than the big banks. And considering those are the most valuable companies in the world, maybe that's what's really worth paying attention to.
How so? What does that actually look like?
So it means breaking the data monopolies that they have, right? The reason, for example, Facebook is a really, really valuable company is they have this big database of all of our social interactions and our information, right? What if you didn't need that central third party to mediate our interactions, right? What if a sort of neutral blockchain handled that? Further, you could imagine that if you didn't like the development direction one Facebook was going on the blockchain, you could fork it, and we've seen a fork in Bitcoin recently, right? You could fork it to try many different ideas or directions. So as a result, you might imagine innovation could happen faster, potentially more freedom, certainly not some other party owning all my data.
Fred Ehrsam there, co-founder of Coinbase.